Ladies and gentlemen, we will start the meeting tonight. I do welcome you here. As always, there's always a huge participation, which is always good to see. I wish for all the newcomers a happy first meeting, and all the people that have been on our previous sessions as well, a happy new year, and hopefully it will be a good year for us, as good as it was last year, which was full of enthusiasm and positivity around blockchain. And as we've managed to get to evidence meeting 7, it is obviously proving something which is worthwhile, because we are getting many more people wanting to join the APPG and get on board coming to sessions as well. The schedule, as always, is very tight, so we will have to try and keep to it. We are known for going over and for getting asked to leave the room very politely the first time, and it gets a bit rougher later on, but we will try and keep to the schedule tonight on evidence meeting 7, which is Cryptocurrencies Finance and Insurance. But before I go into the evidence session, we will just get an update from Professor Birgitte Andersen, who is the Secretariat for us.
Thank you very much, and I'll be very fast. First, I want to say also Happy New Year to everyone. You've seen the program is a continuation of our 2-year program. It has been updated, as you'll also notice. In particular, it's been updated with more faces on, because we've been growing in members of both Parliament and also from companies like Industry and Tech and my next match. So welcome to all the new faces. Also, it's been updated with some of the sectors which we're looking at, because some of them has moved into our blockchain for government council. And so this is mainly private sectors we're dealing with in this case here. The cultural industries has become part of it, and public services are now part of our blockchain government council. I want to highlight that we have a showcase coming up in March, and this is what we are going to be showcasing blockchain live. That means that many that have been actually requested from some of the parliamentarians and also the members. How does a blockchain actually look like? Because we all know, what the internet looks like when we're on the internet. And how to explain the same to the blockchain. So we'll be showcasing blockchain live, and we had a call out, and then we'll be showcasing the blockchain supply chain optimization live. We will also be showcasing the insurance industry live, and in terms of the blockchain supply chain optimization, the blockchain supply chain in the diamond industry, and Areiel is also showcasing as part of our sponsors, and been very, very helpful in organizing this together with Areiel, who is also here today. So this is fantastic. We also have the blockchain for government council taking off, and it is particularly taking off with blockchain services in the sports industry, with particularly boxing, where we're involving my next match, and we have the Department of the Sports involved, Sport England and others. So this is very exciting, and we are building up our task force with the other one, and you'll hear from this very soon. Lastly, we have dinner on blockchain with our sponsors, partners and parliamentarians next Tuesday. So we all look forward to this, and we have a meeting. We have a new program, and there you can see all the dates for our next meetings. And you will also know that we have so far really looked at very much a thematic element of everything, competitiveness, smart contract and fraud, etc. But now we're moving into more like an industry focus. So we look forward to a very, very exciting next 18 months.
Thank you, Birgitte, and obviously everything that the Big Innovation Centre does for us, making sure that events like this happen and producing all the information, booklets and support that we do need to make this a success. So as I said, we are quite tight on the schedule, so I will go through the first part, which is finance and cryptocurrencies. Each one of our speakers will be invited to speak, and then we've got a 15-minute Q&A at the end. So we'll go from our original script, which so we've got Dr. Gong, who's the co-founder of China UK Blockchain Association. If you'd like to start.
Okay. Thank you, everyone. Let me introduce myself first. My name is Gong. So during last year, I think there's a lot of news in the blockchain area, especially in the cryptocurrency area. We think it is a bear market for the cryptocurrency. But let's go back to see the internet, because the internet changed us a lot. A lot of people think blockchain is very similar to internet because it has a lot of user scenario. It can apply to different industry. For example, for the supply chain sector, take supply chain sector as an example. There's a lot of manufacturers in China. They try to use blockchain to do the supply chain management and the supply chain finance. And last year I did a project about how to use blockchain technology to build the digital identity. That project is led by the World Food Program. They want to distribute the food voucher to the African country. So I think blockchain is, for now, it is very young. We need to give it some time. Since last year, it is a bear market. I think there's a lot of reason for that. For my view, one of the reasons is the lapse in the regulation. Because different country, different region, they have different views to the cryptocurrency. So that's why it gave the speculators a lot of opportunities. In 2019, from a regulatory point of view, I think the policymaker can consider similarity in the circulation and blockchain feature of the digital currency. We cannot avoid some realistic problems, such as how to tax the digital currency companies. In addition, I still very convinced of the broad perspectives of cryptocurrencies. I think if the real world cannot accept these new things very quickly, in the virtual world should take the lead to accept these new things. For example, in the gaming sector, in the gaming area, they may be forced to try to use this cryptocurrency to do the value transactions. Thank you.
Thank you for that opening introduction. I'll just move on to Simon Taylor now, who's the co-founder and blockchain practice lead for 11FS.
Thank you very much. Thank you for having me at the APPG as well. I'm also a founder of Global Digital Finance. You'll see the logo for that there. Just to set some market context, if you'd have invested about £200 into Bitcoin a year ago, you'd have about £300 now. That is the definition of a very bear market. It's a negative movement in the price. But I think, as always is the case, the mainstream media gets lost in the price and misses the prize. And I know that's quite close in words, but the point being, I think we've risked looking too much at price, too much at changing finance, and too little at what was the real value. We've seen a lot of use cases, and you see this often in early ages of technology. You see that for every Amazon.com, there's a Pets.com. For every great idea, there's a terrible idea, and if not, there's 100 terrible ideas. And it shouldn't surprise us that we're going through that creative destruction phase in the blockchain space. I don't think that's necessarily a bad thing. I also think, so Global Digital Finance, just to set the scene and my own background, I'm Simon Taylor, so I was head of blockchain research and development at Barclays from 2014 through to 2016, where I helped set up the R3 consortium of banks, as well as being one of the sort of early founding members of the Ethereum community in London, as well as many other organizations. Since then, what I realized in sort of 2017 was we were on the run-up to a market that was going to go pop. I could see that this problem was coming, and I could also see that as my friend here said, the different global regimes were going to take different responses. So China, I think rightly, to protect its currency controls, may have had to look at how does it ban fiat to crypto. But we also had the Japanese government looking at how do they create a formally regulated and legislated environment for cryptography. You have the European response, which largely had been to implement existing rules around the 5th Anti-Money Laundering Directive, as well as many others. And then you had the US response, which was really to try and ensure that everybody was following each of their individual rules in each of their different states and areas. And the problem for this is, this left a bit of a gap. And so what you see is states like Jersey and Guernsey, some of our offshore jurisdictions, and as well as Malta, Gibraltar, and others, kind of ended up having to fill this void. For a global business operating in, let's face it, a global asset class, what we're talking about here is not a state-issued asset. We're talking about an asset that can be traded globally in near real time by almost anybody. We have a system in which rules and regulations are national, and yet the asset and the technology is global. And it shouldn't surprise us that there was a fundamental friction between those 2 points. And yet, if we look to history, we have seen this movie before. If anybody's familiar with the LIBOR rigging scandal of early 2010, 11, you will remember that there was actually a response from the industry. A number of industry veterans and large organizations and global traders got together and created something called the FX Code, or the Foreign Exchange Code. And the thing with the FX Code was, foreign exchange, not unlike crypto assets, has a lot of similarities. So foreign exchange is regulated in the United Kingdom, it's regulated inside the European Union, it's regulated inside the US, it's regulated in China. But who's the global rule setter for all foreign exchange? Well, we would look to standards bodies like IOSCO or the Bank of International Settlements, but there wasn't one clear regulator to rule them all. Except you did find that major global industry players were operating in all of these markets. So the industry took it upon themselves to build a code of conduct called the FX Code. And it was on this idea that the FX Code was built, and now the FX Code is widely used by some of the largest banks in the world, some of the largest FX traders, and it's well understood to be working directly with the IMF and the central banks. This is something that's considered really, really good. But where does that leave us? Well, we decided to found Global Digital Finance because we believe that the crypto asset industry, with the exception of a few bad apples, was mostly founded by organizations that wanted to build better, fairer, more transparent, and more inclusive finance. And so if that's what I believe the goal to be, then how do we help them achieve that? Well, in order to achieve that, they have to reduce the cost of financial services. And the way you reduce the cost of financial services is by removing some of the paper processes and some of the IT equipment that frankly was put in the 70s. The way we move assets around the world today doesn't look much dissimilar to the way we did 40 years ago or 200 years ago. You essentially have people keeping books and records and everybody has a copy of everything. So, if we could move to this tokenized world, the way in which I could represent an asset as a token, in other words, if I were to say this is the asset, and I were to move this glass from here to here, I would see that Lester now has that glass and I no longer do. That is very different to how banking works today. And it's why companies like Circle and R3 and Consensus and a number of law firms have got behind Global Digital Finance, because they believe in the possibilities for truly global finance. So I'm going to come back to truly global finance, and I'm going to come back to truly digital finance. But first, I just want to talk a little bit about a problem in financial markets. And it might not be too bad for some people, which is for capital forms locally. What do I mean by that? If I'm an investor or I'm somebody looking to raise investment, it turns out if I'm in the City of London and I have a lot of connections, there's a good chance I'm going to raise some money. If I'm on the west coast of Silicon Valley and I happen to have come from Stanford University and I'm white and male, there's an extremely high chance I'm going to raise money no matter how good my idea is or bad my idea is. However, if I'm an entrepreneur from nearly anywhere else in the world, it is much harder to raise money. And a lot of that is network effects and human capital and the agglomeration effect. But a lot of that has to do with the fact that financial markets are localized and still based on human interactions. What we've seen with the beginnings of the crypto asset industry is the beginnings of truly global finance. We've seen lots of examples of pets.com. We've seen lots of examples of things going wrong. But in there are some good ideas. And what I believe we'll start to see, if we can build the right code of conduct, if the right industry actors can come together and make it work, we can see coming out of the trough of disillusionment, and we'll start talking less about distributed ledgers and blockchains, and we'll start talking more about privacy-preserving cryptography, and we'll start talking more about truly global finance. And if we can talk about those two things, then 2019 might hopefully start to look a little different. And let's just set this against a market context. We're in a market in which we're looking like we're heading into another potential credit crunch. Small businesses are looking like they're already going to be getting squeezed. Mortgage lenders are already at the bottom end of the market, struggling to lend. We need to be in a position in which financial services and access to liquidity is something that can function for the economy. And what we have here is a real opportunity to reduce the cost of operations for financial services companies, while at the same time reducing risk. Because if I have greater transparency about who holds an asset and what is the chain of custody on that asset, I have a better ability to lend against that asset and to understand who that person is. And if I can preserve the privacy of all of the actors in that transaction, then I can do so in a great way. But I think the caveat I'm going to leave on is all of this stuff is still early and experimental. You can see this in the fact that most of the public blockchains are going through major upgrades. Most of the businesses are still finding their feet. But I do think 2019 is the year that distributed ledger or enterprise blockchain makes a bit of a comeback, and that we're going to see that probably the right answer is somewhere in the middle. It's neither the revolution we hoped it might be, where we get rid of all banks, nor is it just for the big banks and not a story about innovation. I think we'll see the cryptography upgraded, truly global finance, and privacy-preserving cryptography become the themes of the next year, and I hope we can move in that direction, and global digital finance is here to help do that.
Thank you for that, Simon. Very interesting talk about the different global perspectives, and of course, good versus terrible ideas, something which this place is very understanding of, now more than probably at any other time. So thanks. We move now on to Lester Lee, who's the head of global markets and head of Huobi Europe. So if you'd like to give us your presentation.
Thank you. So I first introduce myself, and also then I will talk about few scenarios, what our group believes is the fundamental value of blockchain. So first, our group is one of with the longest history in the industry. We launched in 2013. So in 5 years, we used to be one of the biggest exchange in the world. But in the accumulated trading volume, we are still the number one. In the 5 years, we have the accumulated trading volume, which like $1 trillion US. Yeah, so I think the key vision we found the group in 5 years ago is like we believe similar to internet. Internet is a network you can enable people to transfer information globally much easier. But blockchain, we believe, is a network that can enable people to transfer asset or value globally much easier. So to say that, also our group, I think we are one of the biggest with the most license globally. We got the license in Japan under the financial regulator. Also, we have the fiat exchange license in Australia. Also, we work with the Gibraltar regulator to get the DLT license in November. Also, we approved by the, I think, American SEC to run legally in US. So I personally deal with the regulator in Gibraltar for like almost 1 year to get the license. So the key thing is like, I think our group with the 5 year experience try to help the regulator to believe or understand the key value, what we did in the blockchain. So 90, maybe 99% last year people focus on the price or the ICO stuff, blah, blah, blah. But yeah, that's really attractive. But what we see the more fundamental value is the transfer value, and we think it will the alternative financial system compared to the traditional finance system. Think about this few scenario. I think first is, I think blockchain provide a way to help people in wartime country to preserve their asset. Think about if you live in a country, you are going to have a war tomorrow. Your banking system will corrupt, your local currency will corrupt, and you cannot move your money to another country quite easily. Because no matter in which country, 99% of the general people don't have a bank account in another country. So if your home country comes into a war and you cannot transfer your local money to another country, how can your family preserve your own money, or your family wealth or value, something like that? So each time you see if a war coming up in some country, the local people will use a lot of money to buy their Bitcoin, and then transfer the money into the blockchain network. So even they run away as a refugee or asylum to another country, as long as they connect to the internet, they can get back the money quite easily. So I think that's one scenario. Second, think about there's like almost 200 countries globally, right? Maybe 10% of them, they just run the country really bad or authoritarian or something. You think about some example in the South America, their government just corrupt and their local currency just printing like 100 times, 200 times something. But in the same time, the general people in those countries, without the blockchain, they just can listen to their whatever the government will get all their money out by printing more and more money. But with blockchain, those general people just can exchange their local money for Bitcoin, and Bitcoin is much more stable compared to their local money. Right? I think that's the second scenario. Scenario can help general people maintain their family wealth by blockchain. The third thing, I think a lot of people try and do a lot by cryptocurrency because of volatility, so they cannot use for currency or something like that. But think about the case in US, the new stable coin backed by the US dollar, regulated by the New York financial regulator. So one token is stand for $1 US. So this problem solves the problem of the volatility of cryptocurrency. But by the same time, you still can have the profit or the advantage of blockchain network. You can still transfer those tokens globally within 10 minutes, and which are much lower transfer fee. So we also have the biggest OTC market globally. I said $100 million US trade within China daily, and also maybe another 100 million trade daily outside China. We see, think about the example, if you need to send like $1 million US to your friend or country in African country, if they don't have the bank, if they don't have the local bank, and also usually Western Union will charge a really high fee, like 5% or even 7% for you to send 1 million or something to another country. Right? But with blockchain, you can send $1 million US maybe just within 10 minutes, and with a lower fee like as $1 US to send that 1 million. Yeah, and your friend in African country, they don't need to go to the bank to open an account and ask for a USD dollar account. They can just open a wallet, digital wallet in the internet, maybe by less than 5 minutes. Yeah. Another thing, I think also this international transfer may be another really good case, the actual application case right there, nowadays. But most regulators, they challenge me is how you do the KYC, AML, etc. And we usually reply with that is like most cryptocurrency, other than those private currency, like we don't mention that. I said 99% of the blockchain cryptocurrency, you can trace all their transfer from their blockchain network. So it's much easier to trace money laundering or KYC than traditional banking system, than the cash. But the key thing is right now, the KYC and AML infrastructure in our industry, also the regulator, they are not familiar with it, to use those two to do the KYC ML on blockchain. So I think maybe after 1 or 2 years, when more and more industry companies work with the regulator to understand how to use the new technology to do the KYC ML on the blockchain. So there we saw a lot of uncertainty or uncomfortable thing about how we could use blockchain as a new way of transfer money network. Yeah, that's it.
Thank you for that. And you talked about moving from traditional to modern financial systems, as we are moving from cryptocurrencies, which is quite a modern concept, to the finance part, and we go to Victoria Thompson, who is the head of Global Innovation Legal at Barclays.
Thank you very much. I'd like to thank the committee for the opportunity to speak on behalf of Barclays. Innovation Legal inside Barclays is a new team, and I think that demonstrates the investment that Barclays is putting in this space, in that we are a specific legal team that helps the business when they are doing business model innovation and supporting them where they're integrating disruptive technology into the banking products and services that Barclays produces. And I would echo the points that Simon's raised. Really, I think it's fair to say, if you were going to try and pin where DLT and blockchain is on the Gartner hype cycle, I think you'd say we were in that trough of disillusionment. But I think there really is the opportunity in 2019 to come out of that trough and go up the slope of enlightenment at the back end of 2019, because the ecosystem is really maturing. And I think the partners that are out there for institutions like Barclays to partner with, the cream is starting to rise to the top. And we are moving beyond that cycle of proof of concepts and experiments with different use cases, and actually to see real integration into the systems. So on that note, I'd like to talk about a few of the projects that Barclays got on its books at the moment. So for example, in the payment space, Barclaycard has been working with the Silicon Valley startup Crowds to digitise and speed up what is still for many firms a very slow process and very clunky paper-heavy process in supply chain payment for business-to-business transactions. Consequently, selling and finding business services can mean flicking through catalogues, making phone calls, invoicing on paper, dealing with clunky, antiquated payment systems. And we estimate in Barclaycard that 4 trillion is lost in sales and unneeded costs each year in that B2B marketplace. So Crowds and Barclaycard are looking to change this by providing a blockchain-based marketplace that connects businesses seamlessly and digitally, moving the entire procurement process online. Crowds came through Barclays' 2018 Tech Accelerator Programme, and they promised to make it easier to find users and suppliers and to sell to other firms, while digitising the documents and leveraging the blockchain to enable that. And also looking at digitising invoicing, purchase orders, allowing smaller businesses to get paid, and earlier to keep cash flowing through their books, which is very important when you are a small business. And so Barclays is now doing a proof of concept with Crowds and turning the proposition into a fully functioning ecosystem, and we're testing that with live clients in the next 24 weeks. And beyond that, we want to hopefully show real world success, and that can really transform the payment space for small businesses. And also, Barclaycard is also looking at developing self-sovereign identity solutions and partnering with Evenem, who has also previously presented evidence at the APPG committees, and we're actually in the Evenem Accelerator Programme to look at how we can develop tools and products that make it easier for businesses to integrate and have self-sovereign identity capabilities into their own systems. And Barclays hopes that by using this technology, we can also help fight cybercrime and reduce fraud, and the age-old problem of passwords, which everyone has. Whenever you try to integrate any system or access online banking or systems at the moment, it's can you remember your password? But actually, self-sovereign identity and the use of blockchain can really solve that problem. And also, as Evenem's counsel Elizabeth presented in her evidence, it can really deliver GDPR compliance in a different way. And I think that is really important point to call out, that blockchain has wider capabilities beyond the initial sort of financial services blockchain 1.0, but also you can look at it from a 2.0, which is actually how you connect intangible and tangible assets in the property market, mortgage applications and so forth. And I think when you look at also blockchain use cases in the investment banking space, Barclays has been really active in that space. with our Wave pilot, which is again a follow-through from our Accelerator programme, where we were the first organisation in the world to execute a global trade transaction using blockchain technology. This enabled a letter of credit transaction between Orna, the Darish Ivy Board, and the Seychelles Trading Company to have their trade documentation handled on the new Wave platform, and with funds sent via SWIFT. So it was a combination of existing technology sets and new technology sets. And I think that will be a trend that you see coming through the financial services sector, in that there will be this new wave of technology that runs in parallel for a while from existing incumbent technology, but actually then there's an evolution where you move to potentially new rails that are blockchain based. And you can see this as well in the CLS FX forum space, where it covers trade settling outside of CLS's existing settlement service, which is kind of an industry standard in that space. And so FX instructions could be submitted through CLSnet for more than 140 different currencies. And that could be truly transformative. And so that's something that Barclays is working on alongside CLS, and that could ultimately go to replacing SWIFT. But it's not quite there yet. There's also the DTCC's Trade Information Warehouse upgrade, which will deliver distributed ledger solution for post-trade derivatives processing on existing TIW capabilities and interfaces. And the aim is to streamline and automate and reduce the cost of derivatives processing, which again is extremely manual at the moment and paper-heavy and time-consuming. So that could be really transformative. There's also a utility settlement coin project, which is a consortium of 17 financial institutions aiming to look at digital cash instruments. There is the ISDA common domain model, which is providing a business process and data standards for the derivative post-execution trade lifecycle, and that the intention is to define and drive adoption standards in order to eliminate siloed and duplicative data processing at the moment. Simon also mentioned the R3 consortium, which Barclays was one of the original founding members of. And also there's a number of other activities that we are involved in through our regulatory and policy and government relations teams. We were involved in presenting to the UK Law Chancellor and Secretary of State for Justice back in 2016 to talk about actually how blockchain can be used to automate legal agreements, because there is a massive impact that blockchain could have in the smart contract space. We're also working with the UK House of Lords report on DLT, powering innovation for the UK and leading to a digital nation policy and strategy. And I think there are, with all of these activities, challenges. And there are challenges with incumbents like Barclays in heavily regulated industry trying to innovate and experiment in unknown chartered territory. And I think you can bucket those challenges up into the four sort of sets. I think there's a real need to focus on education and skills and giving people in the workforce in the UK a capacity to understand what blockchain is and to build those skills so that they can actually participate in building this new breed of economy and policy and services. And I think it's great to see the work that the APPG are doing and the Big Innovation Centre to look at building those frameworks. I think that's really important, and it's something that I'm actively involved in inside Barclays. Actually, how do Barclays, and we take our 33,000 staff and give them enough capacity to help on this pivot towards these new systems and technologies. Because I think blockchain will only succeed if you get widespread adoption and in across the financial services, much like Simon has given evidence to, you get collaborative networks that work together. I think another big challenge for financial services institutions is technology debt and cost of integration. I think this is something that cannot be underestimated. Regulated industries and financial institutions have significant technology debt, and therefore they're very cautious about creating further technology and implementing new technology too soon, and then having to rebuild it again. And I think legacy systems are extremely complex, and because we lived in a world of proprietary IP, they are very expensive to license and use. So I think blockchain again has an advantage there because it's predominantly open source based, and therefore that makes it easier for that technology to be implemented and spread quickly. I think there are, however, still security and privacy concerns about blockchain and the transparency of DLT, which sometimes actually hailed as one of its benefits, it also has something that concerns people in a traditional institution about private key storage, what happens if somebody loses their private keys. So there's a lot of custody issues that need to be worked through. I think there's also a lot of legal and regulatory issues, as Simon sort of mentioned again. Governments and regulators need to work together on this and come together at a global level. And I think there is a lot of activity in the UK in that space. But I think there's much to be positive about, and there's much that can be done that can be really transformative. And I think this aligns with Barclays' values, and it's something that we're very invested in.
Thank you. It's so nice to see one of our more established institutions taking this very seriously. We'll move on now to Marc, who's an associate at Fox Williams.
Thank you very much, and thank you to the APPG, and also with apologies to the APPG, I'm going to have to deviate slightly from my submissions because with a hat tip from Victoria, some news broke in the MIT Technology Review about 4 or 5 hours ago which completely changes everything potentially. So it's an example of Japan, which as Simon mentioned has a progressive regulatory regime and certainly recognises certain cryptos as legal tender already. And they have a challenge with the Olympics coming up and the capacity of the financial system to be able to handle a large volume of people coming in and a large volume of payments. News has broken in the MIT review that Mitsubishi UFJ Financial Group, the largest bank in Japan and the 5th largest in the world by total assets, has teamed up with an American company to create a blockchain-based consumer payment network. Now, so are lots of other people, so what's so great about this one? What's interesting here is its capacity. So we talked about capacity of current chains to be able to process transactions, often seen as one of the limiting factors. So by way of numbers, the open source chains at the moment are in the low tens of capacity for transactions per second. Visa, often touted as the standard, is about 1,700, but bearing in mind that Visa does authorizations, not settlements, whereas the open chains do settlements as well. This new chain, and I had to double check this when I first read it, claims in tests it's able to handle more than 1 million transactions per second, with each transaction confirmed in 2 seconds or less, and say it could eventually achieve 10 million transactions per second. Now, I'm still kind of trying to wrap my head around how they power this, but if they are able to get this in place in time for the Olympics, and that's a use case which is about as real and high profile as you can get, with global implications in terms of feasibility, exposure and tests, that is going to put everything that my fellow panelists have talked about very much into the front and centre on the world stage in terms of public awareness, the need to take action, and the need to bring the world up to this standard. Of course, it's technology proprietary, so it'll be interesting to see how that's actually going to be achievable. But what's interesting from the lawmaker's perspective is the level of government support this has. So Prime Minister Shinzo Abe says he wants 40% of payments to be cashless by 2025, and to encourage that, they are planning to offer tax breaks and subsidies for companies that get on board. And that could be part of the UK's opportunity to promote itself as the leading hub for digital assets worldwide by using sensible tax policies and investments and encouragement to allow local development and local investment into companies developing solutions locally. That also drives a coach and horses through most of my solutions, but I'll still pick up on some of them. Yeah. So one interesting point there is because these tokens are recognised in Japan as legal tender and some of these new platforms may have their own tokens, does that mean they are then effectively foreign currency, and does that change the tax treatment? So at the moment, under the HMRC guidance, if you receive certain tokens, and this is delineated as exchange tokens, Bitcoin, Ether, that sort of thing, utility tokens, which are meant to be used for certain services, and security tokens, which in and of themselves fall under existing regulation for financial services. If you receive tokens as a form of income, exchange tokens, then it's income tax. Otherwise, it's treated as a digital asset which attracts a chargeable gain for CGT purposes. HMRC makes it very clear they don't treat it as money, but if some of these tokens are recognised elsewhere in the world and there's a lack of alignment and harmonisation on this point, would they then be treated as foreign currency and therefore attract a different tax treatment? So there's an argument there for a flexible approach, and that may change in the future, as well as we're seeing on the regulatory space, coordination across multi-jurisdictional parties, which on the regulatory front we're seeing with the FCA liaising with the regulators. Apologies for the speaking speed, but you can slow down the video when you play it back. Lots to cover and not a huge amount of time. So I think that really answers the question of what is the future of money. If this technology is proven to work at a test and stress case like the Japanese Olympics, and it's proven to be acceptable, this is a game changer, not just in terms of the speed and cost of transactions, but also the sub-industry this is going to generate in terms of ancillary services, in terms of the ability to move money around the world. And as Lester has pointed out, the remittance market is huge for this market. At the moment, PSD2 removes merchant charges on usual credit and debit cards, so there's not much of an incentive for consumers to use crypto in the local market, notwithstanding the lack of a large network of merchants to accept it. But if this changes and the capacity is there and the speed of access and the security and the stability is there, then we could see a heightened appetite for use of digital assets to affect day-to-day transactions. So I think in terms of what this means for people, as pointed out by Victoria, education is concerned, not just at business level, but also at individual level. Whilst there is disintermediation in terms of control over your assets, that's a double-edged sword, because if you lose your keys, then you lose your assets. And if you are able to get away around that, that's great. There's talk about regulation of wallets, in terms of wallets being where you store your digital assets, in terms of anti-money laundering KYC purposes. And that's actually enshrined in the upcoming, they call it 5 MLD, but it's actually the 4th money laundering directive as amended. But actually, in practice, it takes 2 seconds to go online and set up your own wallet, and you couldn't really implement KYC AML controls even if you wanted to. But as the market for custodian and managed wallets grows, there is an argument and benefit to KYC AML to give the industry some legitimacy, give them comfort, and to reduce the risk of money laundering and fraud. And I think as financial services and certainly investors start to look at the ways in which they can use DLT and digital assets as enhancing existing financial transactions and offering new and innovative financial transactions, such as use of security tokens and other means, then that will show that there'll be a growing market in other areas around us, which will have other aspects which need to be addressed from the regulatory legal side. Smart contracts are quite interesting, especially being a lawyer. I'm quite interested in the enforceability of it, whether that's been tested in court. They haven't yet, and even if people think that certain legal principles which haven't yet been resolved could simply be resolved by a court, might need to be careful what they wish for, simply because in some cases the court might not be asked to decide that question. They'll simply be asked to deal with fairly conventional civil disputes in some cases. So the Law Commission is doing some great work looking at this space, and I think that's part of the collaborative approach that different bodies in the UK are taking. And that fills me with promise that the UK and the English legal system in particular will retain its worldwide reputation for resilience, flexibility, practical common sense, and a reliable judicial system, and thus retain its status, whatever happens in the coming months, as the world's preferred jurisdiction, or one of the world's preferred jurisdictions for doing business. And we should definitely work to maintain that. I think in terms of recommendations for lawmakers, the position is fairly clear in the direction of travel based on the Crypto Assets Task Force report, the Treasury Select Committee report on virtual currencies, and even Marc Carney's comments in recent media outlets on central bank digital currencies, that there is an openness to this technology and its potential, a recognition that the UK is well placed from a technological, financial services, educational point of view to lead the world in this space, and has the regulatory and legal system which is already well regarded and sets a standard in some cases for many other jurisdictions to look at or even follow. And those should all be continued on a collaborative basis. And the final point I'd make is on central bank digital currencies, which I think potentially could be the future of money in its traditional sense. Central bank digital currencies are central bank issued and controlled digital assets, and there's certain monetary policy considerations which different parties have looked at, different central banks are looking to implement it, and I think that could be the future of money in a more traditional sense, and they could be an asset class in themselves. So lots to cover. Sorry I might have gone over slightly, but thank you very much for your time.
Thank you, Matt. We all go over in this APPG, so there's nothing wrong with that because of the enthusiasm that's always shown by everybody that makes contributions. Now we finished the finance and cryptocurrencies section. We've got just about 10 minutes now where we can take questions from people in the room. If you're asking a question and you're at the back, if you would stand up once so we can hear, or whoever you're directing your question to can hear, and that just makes the proceedings a little bit more easier, and so the camera can pick that up as well. I would like to welcome a member of the APPG from the House of Lords, Lord Truscott, who's going to ask our first question. So I would ask that you do try and keep any answers as succinct as possible so that we are near as a time as possible. Lord Truscott.
Thanks very much, Damien, and thanks very much, it's Peter Truscott from the House of Lords, as Damien said. Thanks very much to our panel for such stimulating presentations. I have one question really for the panel, and obviously whoever feels like taking it up. My question is, can you see the blockchain platform applications developing separately from cryptocurrencies? Because cryptocurrencies have had a very tough year, and cryptocurrencies themselves, and the very viability of cryptocurrencies has been questioned. But as has been mentioned, there are other applications of blockchain platforms. The Forex has been mentioned, smart contracts. But there have been other reports in the press about syndicated loans using supply chains, commodity trading. There are a whole series of other applications. And I just wondered, do you see perhaps blockchain platforms themselves, the technology developing sort of in a separate path or in a parallel path to cryptocurrencies?
Yes to all three would be my answer. Yes and no and yes. So you'll have the traditional world of distributed ledger and permissionless blockchains was how we would have labelled them. And one might argue that they were at loggerheads. They were two different worldviews. You have it with the currency or without the currency. I would argue that if we were to take the permissioned blockchain world, the DLT world, actually most of the proponents of that space would say, don't throw the baby out with the bathwater. We might not have done a permissionless blockchain, but we see great value in representing the pound, the euro, the dollar, and other assets as being something that you can trade on a blockchain, right? So there's a nuance there that I think is it sounds pedantic, but it's actually really, really important. So in essence, if that were the only possible future, then it wouldn't be either or, it would be a sort of a mix of the two. As we move into the permissionless world, this is a space of massive innovation, and I think we are seeing lots of pets.com style failures, frankly. But I would argue that whilst many permissionless blockchains might disappear, there may be several still standing, and what they end up doing is looking less and less like a currency to compete with the pound, and more like a way to pay for a service that is owned and operated by all of us and nobody at the same time, that will become less weird over time. So we invented two things at the same time. We invented a way for many people to manage a service and a different way of representing assets. And the permissionless blockchain world put both of them together in this explosion of kind of experimentation that created a whole bunch of challenges. So I don't think it's an or, I think it's an and. What I think will happen is DLT will really come into its own in 2019 and 2020, and will start to do productive things, as Victoria was saying. The permissionless world, the story's going to change. I would point you at projects like Zcash and zero-knowledge proofs and the future of privacy. I think what those networks are going to do for privacy, even though behind the scenes there is a virtual currency, you and me and the people we know wouldn't be using that currency to buy goods in a shop. But the way to pay for the use of that service would be through this currency. So it's a not an all, and it's a complex answer to your question, but I hope it was helpful.
Victoria, for you.
Yeah, I mean, I would just give it some context and think of it, take the iPhone App Store or Android, there are apps that sit on there, and there are many apps. So I think you'll see less apps that deal with currency type activity in 2019, but you'll see more useful apps that interact in the day-to-day world and in a business world will be developed in this year. And for Barclays, I think that's where, because we're a regulated institution, and also because of the nature of cryptocurrencies and the way they've been used by certain sectors of society to finance crime and to do other things, therefore we can't stray into that territory, and it would be wrong, and we would expose our clients and customers to risk if we did at the moment. But what we can do is like look at self-sovereign identity, like I said, and in the supply chain space, those apps that we're working on developing will have an interface with our customer in the app store world. But there will be still work that has to happen at the network layer and the protocol layer to enable those apps to exist. So I think if you think of it like a stack in that sense, that community has to develop to enable that front-facing app store to exist.
A quick comment from Areiel.
Yeah. Just very quickly, if you want to see examples of blockchain applications that are already live and working that aren't crypto, and this is actually to anyone in the room, come to the showcase in March, because we will be showcasing blockchain solutions that are live, that have already been deployed and are doing real work here in the UK. And it's a whole evening dedicated to answering your question.
Anyone else? If you'd like to stand up as well.
Thank you. Thank you, sir. I'm Jeff Goodell from University College London. So I'm going first to Simon Taylor's point about the privacy aspect of cryptocurrencies and distributed ledger technologies generally. And I think Simon struck a rather optimistic tone about this, but then Marc Piano, I think, brought in a very interesting angle when he said that Shinzo Abe was basically looking to reduce the share of transactions that take place using cash. Now, as we know, all of these different electronic funds transfer mechanisms, including even the privacy-preserving cryptocurrencies such as Monero and Zcash, etc., are actually less anonymous than cash. So my question for the panel is, what are the new dependencies and constraints that are going to be introduced by these kinds of digital payments systems, including cryptocurrencies and others, and how are they going to impact privacy, and what can we do to ensure that the privacy of individual persons making transactions is made better and not worse through the introduction of these systems, which may include dependencies and requirements that might incline people to become less private?
Yeah, I think it's a fair comment. So let's bear in mind that we've seen some of the greatest hacks this year, in the last couple of years, of so-called organizations that were GDPR compliant. Being GDPR compliant doesn't mean you're secure. The alternative world that we live in now is absolutely a problem. Maybe it was an optimistic note, but I did say with intent that I hope we can find a world in which we preserve privacy more. I do think it becomes much more of a case of not moving data about me into any public fora, and actually moving metadata about me. Sorry, we're nerding out a little bit here, but we can talk about this more. But really, it's not, I might not put that I'm Simon Taylor, I'm 34 years old and I grew up in Halifax, West Yorkshire onto a blockchain, but I might put some metadata that allows the right people to be able to access the underlying data either from me or in their data store. In other words, the data doesn't move, the meta allows me to get access to that data, which creates new attack surfaces, but it limits it dramatically. And I would point you at companies like GuardTime and some of the work by PwC and Northern Trust. There are people that are looking at cryptography upgraded. So in layman's terms, don't put all of your information on a blockchain, people, for the love of God. What you do is you put the information about your information and who can access it and where it's stored to the right people. And this is what Evanim and other organizations are looking to do. So, and I know that that's what the Zcash Foundation believe in. So it might be worth connecting to Jack, who's sitting in the back corner there at some point.
Not to mention that the more data you put onto a blockchain, the more expensive it becomes. So there's actually an incentive to minimize that amount, hence the metadata argument.
Thank you. Gentlemen.
Sorry, good evening. Gary Nuttall, independent consultant blockchain, primarily working in insurance, banking and legal. I'd be really interested to hear from the panel, particularly given the representation of panel members, their thinking around the fact that China holds 29% of the patents in blockchain and is currently filing around 50–55% of them per year. In terms of UK financial system stability, are they comfortable with us migrating to an environment which is dominated in that way?
As an IP lawyer, I'll try and answer that one. I think that's it's a trend that's prevalent through many emerging technologies. I mean, in the last 2 years, you've seen China pivot and absolutely outstretch the US, who's traditionally been the greatest filer in this space. And I think it's really interesting that they are now really hard filing in that space and also developing the technology. I think it's something that we do need to be very mindful of, and it's something that I raise as an issue myself. I mean, Barclays does hold some blockchain patents, and there are a number of other leading institutions that are filing hard in that space. But I do think it's something that we need to be very mindful of. But I think this is not just a trend that's in DLT, it is a wider technology trend that China has at the moment in the patent space, and how they are looking to use IP as that weapon potentially. But also it could be something that is just, they are waking up to actually the power of IP, I think, in China is a broad trend. But I do think it is something we do need to be mindful of, and I think it's something very much that I would recommend everybody who is looking at this space to be very mindful of when you are creating new products and services, and to have a smart IP strategy that is linked to a smart innovation strategy and a smart tech strategy. They should all be aligned, and it's something we should really be thinking about.
If you make a quick point and ask them to make a quick answer so we can get to the second part, but if you'd like to make a
Sure. My name is Fabio Demi. I'm a CEO of a company called Give. We use blockchain to build a decentralized cloud computing business, and the revenues go to charities around the world. The question I have is, going back to some of the initial comments about fragmentation of regulation and the impact it may have in the market. I just welcome your views as, how should we settle for the fact that we're going to have fragmented regulation going forward, and that's just the environment we have ahead of us, or do you see yet the possibility of any kind of level of international coordination around crypto in particular?
So that feels like a layup almost, and I've never met you before, genuinely. So Global Digital Finance is working with the organisations like the OECD, IMF, FATF, IOSCO, the Bank of England, the FCA, the Treasury, and as well all of the European Banking Authority, the ESMA, SEC, and beyond. And of course, working with the OECD, we're stretching well beyond the G20 into small jurisdictions as well. Generally, that is the mission statement, so let's connect afterwards, because I truly believe that whilst standing law 100% has to be observed, there is a great opportunity when we sit above the standing law.
Now we will move on to the second part, which is on insurance. I would ask our contributors to try and make it 5 minutes, and then we'll still have time for some questions at the end. And we're actually in order, the panel's in order. I think the first time we've actually gone in order, so that's a major achievement in terms of the APPG, even though there was some problems with getting in, as there always is. We'll move to Areiel Wolanow from Finserv Experts, if you would like to give us your submission.
Thank you. And thanks for having me. Finserv Experts is a consultancy that provides advisory, solution, and delivery services for DLT. Our clients include central banks, financial regulators, several major global banks, and most recently Lloyd's of London in the London insurance market. One of the consistent themes that we've heard over the past year in these evidence sessions about the value of blockchain is in the area of disintermediation, and that's actually less of an issue or less of a topic in insurance, because that disintermediation has largely already happened. 30 years ago, over 90% of all personal insurance of all kinds was placed through brokers. Today, personal insurance brokers by and large don't exist. They've been completely disintermediated by aggregators who do a much better job both in terms of cost and in terms of delivering the desired result than brokers were ever able to do for people. So the transformations that blockchain promises to deliver in the area of insurance are less around disintermediation than they might be in some of the other industries and use cases that we've heard. So what are they? One of them is around supply chain provenance. You're going to be seeing a company called Everledger, which is one of the very first successful pure DLT startups that does supply chain provenance for diamonds, wine, works of art, and other things, and a number of others as well. By providing a clear track of the provenance of assets, ensuring those assets can be considerably less expensive, and we're already seeing this. So these are changes in the cost structure of insurance that are happening now to assets that are listed on these distributed platforms. It also reduces the incidence of fraud, which again makes the core insurance cheaper. Perhaps a bigger benefit, and the one that Finserv Experts has been directly working on for the past year and a half, is around making the insurance marketplace much more efficient. We've just completed in December delivering a working DLT prototype. We were engaged by Lloyd's of London as part of the London Market Target Operating Model, the Massive Transformation Program. The business case for doing this and looking at the bureau that has been handling insurance transactions and claims administration for the London market since 1810 delivers over over £100 million a year of year-end benefit. Looking at some of the other use cases, we have seen at least 2 other cases. These are hard, empirically evidenced cases where the projected cost savings for moving onto a distributed platform for insurance clearance is in the 80 to 90% range. These numbers are so big that we can't use them in presentations because people don't believe them. But the evidence is there, and if anyone would like to talk to me about that, I can go on for ages about it. But so there's a dramatic change and dramatic transformation that's possible. And the reason, Simon alluded to this as well, the reason is that currently everybody keeps their own version of the same transactions and spends more money reconciling, rekeying, and resolving discrepancies than they do in the core delivery of the service. So if you can change that, not only do you save a lot of money, but you can, but the people who who are currently doing this would be free to do much more valuable work. Now, I've talked to the CEOs of a number of insurers and brokers in the London market, and I've asked them point blank, does this mean there's going to be a lot of layoffs and a lot of job loss? And 2 in 1, they've said, absolutely not. These people have irreplaceable expertise. I can't afford to lose them. What I'd like to have them do is spend a lot more time talking to customers and helping customers. So this is about freeing up people who are currently doing administrative tasks, but who have a lot of expertise, and expertise is absolutely invaluable in insurance. It's what allows you to manage risk effectively and have them actually engaging with the customers and improving the level of communication, the level of service. But the biggest one, I've saved for last, and the one that I'm the most passionate about personally, is in the area of microinsurance. Finserv is currently working on a project in Indonesia to do insurance for natural disasters. Now, this is something that's been impossible to do in the past for several reasons. One is the cost of administering a policy that is worth $200 is not much different from the cost of administering a policy that's worth $2 million. The manual steps are the same. It's the same thing to collect a premium, to pay a claim. The other is that when a natural disaster like its tsunami in Sulawesi recently strikes, the only way to pay the claim historically, okay, and I'm not making this up, this actually happens, is to send somebody out to an impacted village with a suitcase full of cash in a helicopter. That's the only way to pay the claim. So it's a very, very expensive way of doing business. And for small amounts of insurance, it just doesn't work. You can't charge somebody a reasonable premium. Blockchain together with mobile banking has the ability to change that. Okay, we can get to a point where there's no human intervention from placement down to paying a claim. The project we're doing, the claims are going to be parametric. If you are in the area that's impacted by the tsunami or the earthquake or what have you, you get paid. So there's no claim investigation, there's no opening, it just, this happens and you get paid. So first of all, you get paid enough, much faster. And second, the money, nobody has to come in a helicopter. The money's going to be paid directly onto your mobile phone. So all of a sudden, if you're lucky enough to have actually survived the event, you can get back on your feet very quickly. And the idea here is that the insurance policy is going to be for a full year's worth of income, so that you've got enough to really get back on your feet. More broadly and more directly connected to the UK, microinsurance is not just about giving insurance to people who can't currently get it. It's about changing their lives in lots of fundamental ways. If you can get insurance, it doesn't matter how to work. You can start a business. You can buy a home. You can do things that you cannot do otherwise. Moving on to what advice and what guidance I would want to give to lawmakers. I want to start Damien, by telling you something you probably almost never hear, which is that the UK government is actually doing a great job. If you look at the locus of expertise as represented by companies like Everledger, like Blocksure, like Atlas City, if you look at the ecosystem support as represented by outfits like the London Blockchain Foundation. And if you look at the group of people who've presented here at these evidence sessions over the past year, I've delivered projects, blockchain and otherwise, in 40 countries around the world. You don't see this central, this aggregation of expertise. And compared to the size of the UK, the regulator here has a fairly switched-on attitude. Yes, there are things that could be improved, of course, but you're in a good position. And the thing that I'm going to say that you want to do, is perhaps something that we don't hear a lot of, which is blockchain is perhaps unique where we want more regulation, not less. One of the biggest barriers to investment and further innovation in this space is regulatory uncertainty. So the more quickly the UK can get out in front and say, yes, you can set up your blockchain, you can even set up your crypto business here, and here are a set of rules to play by, that's going to cement the competitive advantage that the UK has already done a good job. And the last thing I'd like to do is to invite the government to get involved in sponsoring microinsurance directly. Roll up the sleeves and make it happen. It doesn't, there is lots of capacity available. You just need to provide the regulatory framework and the level of support. There's plenty of people willing to invest in providing the capacity. This is something where you can make a difference in people's lives very quickly with very little taxpayer cost.
Well, there's no better way of getting anything when you just pay them a compliment, so I'm sure to extend that to the government. We'll move on now to Phillip Harrison, who's the head of digital process at Fifth Nine.
Hi there. First of all, sorry for being late. School run stops for nothing, so apologies for that. Thank you for having the opportunity to talk. So I'm Phillip Harrison. I'm head of the digital process at Fifth Nine and the head of the consulting wing of the company. I've worked in technology all my career, so about 10 years experience in IoT mostly, and most recently moved to blockchain and RPA. Fifth Nine, they're a consultancy and software development firm which specialising in automation capabilities. So what I mean by that is blockchain, RPA and AI technology. We work with our clients to help solve their problems using our products which are based on those technologies, and also we help build B2B and B2C applications based on blockchain. So I want to paint a picture around the insurance which oddly is a little bit customer centric. Let's think a little bit out of the box here, and this wants to take you through that journey of more blockchain automation and also a bit of AI there to make the insurance company a bit more, say, customer centric. So I believe at the moment there's four main problems with today's insurance business from a consumer's perspective. Number one, they're not incentivized to pay out your money. It's quite simply, they don't pay it out, they get more profit. Number two, it's slow. They can hold on to your money as long as they can. Number three, insurance is expensive. And number four, let's be honest, we've all had that, you've been in an accident phone call, so they sell your data. So automation capabilities using blockchain can help address these points. So I want to paint a picture using the blockchain technology which can revolutionise the customer's experience in the insurance space. So first off, let's say there's a private blockchain-based marketplace on, say, High Pleasure. This marketplace is B2B, so insurance companies can sell through smart contracts when insurance to dealerships. So for example, Aviva could have smart contracts sell 4,000 car insurances. BMW, for example, could then instantly bind, transfer these, then buy these insurances traceably and fully transparently. And then BMW can package them up when they sell a car to a consumer, buy a BMW, get a 3 years insurance. So immediately there's a new revenue stream there. Then, let's say I buy this BMW and my metadata is linked on the blockchain to this insurance policy. So just really quick, my metadata there, not my actual, my actual data. These details are visible to me and the insurance company. So then I have an accident. So linked to my insurance is now to store the accident details from the third party's insurance company. The information applied to that box, my BMW, showing the precise location, time, speed, etc. And my own photos I've taken my smartphone loaded straight up to the blockchain as well. All in one place on the blockchain, on this marketplace against this contract. This information is stored immediately, transparently, securely, and irrefutably. Then the insurance company makes a decision and to store the blockchain for me to see. So then I want to move my insurance to another company. I search prices, I don't need to type anything in, it's all there on the blockchain. I can say, go compare, can access my details, and they can tell me the best insurance detail, best insurance. And then I buy the insurance as a smart contract, again, transparent, traceable, secure, and almost instantaneous. and I'm 100% in control of who has access to my data. So the model then opens up the market to insurance, who is a company called Lemonade, for example. They charge a flat fee. So if they don't pay out, they don't get extra profit. The profit goes into a pool and then goes to charity. And then the people who are part of Lemonade, who have their insurance with them, choose which charity it goes to. This removes incentives for insurance companies not to pay out, and also reduces the incentive for people to falsify their claims, as they're taking money away from charities rather than corporates, which people don't quite like doing. And then take it one step further and remove the insurance company almost completely, make it a jury-based model. Imagine each customer having to sign up to act as some kind of node, receiving information about accidents, quite anonymised, and making 10 decisions a month on other people's accidents to retain their policy. And then the decision for a claim is made by a massive jury of people to make it fair, with the insurance company purely acting as a validator of effectiveness rather than making them do most of the work. This will massively reduce the cost of policies and the time for claims to be paid out. A final evolution will be to introduce AI for most decisions, leaving humans to access only the most complex cases. For example, a claim says about an accident, but the GPS says they're in a shed somewhere, smacking the tire into a wall, which is obviously what people will do to falsify their claims. The GPS says they're actually not on the road, they're in the shed, therefore their claims are denied automatically. This lays the foundation for true IoT and smart cities. With autonomous cars, with the car insurance owner fully automatically paying another car insurance owner when they've caused an accident. So this whole thing enables the smart city concept. So what's stopping us getting there? First of all, the maturity of the technology and the confidence in the technology as well. We need a bit of time to get there and have the confidence in it. For the B2B market, there's no other blockers apart from someone building the solution. For the B2C, you need to have, for the jury model, you need to have the volume. And to be honest, that's where a lot of companies have fallen down who've tried to do this, because it's high risk. So where can government help? So similar to what Marc and Victoria actually said, the vocal advocate, I think, is the main thing. Shouting from rooftops about blockchain technology, what it can do, how it can benefit, and getting that education out there is absolutely critical to give people confidence to invest in this. And secondly, providing an introduction capability for smaller companies. There's a lot of startups in the blockchain space who are building applications who can get introduced to the larger companies to help showcase their solutions. Doing that introduction would absolutely help the development of these applications on the blockchain. Thank you.
Thank you for that. And we'll move on to our last speaker, but by no means the least, Dr. Jianhua Shao he's the solutions architect at Alibaba Cloud International. To you.
Thank you very much. Yeah, my name is Jianhua Shao from Alibaba Cloud, based in London, London Covent Garden. And before Alibaba, I worked for Barclays Bank and also London Business School. Yes, yes. So when I got this invitation, and I'm asking a question to myself: how far the blockchain insurance from me? Whether there is any kind of killer app in the world, we can really try. And it reminds me a story happened on my side, which is a couple of years ago. My parents told me that they bought a mutual insurance, which is supported by the blockchain, which made me very surprised because they are living in countryside in China, middle of nowhere. Okay, and basically there's no insurance broker will visit that villages, but they bought an insurance product from their mobile phone. And later, when I joined Alibaba, I found out they bought this from Alipay and Financial, a part of Alibaba group. Yes, and then I start to dig into the story. The story is at the beginning, there's no insurance company want to do this kind of business. It's too small. Okay, not a kind of mainstream financial product. But there's one kind of insurance company want to collaborate with Alibaba and provide this kind of services. A lot of people try because it's very low barrier to entry. It's only cost my parents less than $1 less than 1 pound to join. And every year there are a lot of claims, which is people they injured or got health problem, they can claim, and people can see with those claims going for. So in theory, probably, I mean, there's no kind of real figure to say whether there's any fraud happened behind or not. But in practice, in reality, it's very low, as far as I know. And more and more big insurance companies join this platform. So blockchain mutual insurance is already a kind of, I would say, maybe a killer application, a real insurance product happening in China. A lot of people benefit from this. So the first point I want to raise is when we talk about blockchain insurance, how can we convert a concept into a reality? What is the commercial value we can come out from this? And also what we can learn from this story. Because it's not only about insurance, but it's also an ecosystem. As other panel mentioned, that blockchain is already play a very important role in the supply chain finance to trace the product across the board, also to reduce the kind of a risk trust issue. And to my parents, they even don't use computer, okay? So whether it's also solve the social inclusive or exclusive problems, because nowadays they are part of the ecosystem to enjoy the benefit from this, and they can be proud to say, tell me that they're using some technology which I even haven't tried yet. So that's the second point I want to raise, that in order to turn this from a concept to reality, what kind of ecosystem we're going to need, particularly from the business, but also from the social point. Blockchain could be part of the social innovation system, I believe. Then the last point, it probably is very obvious today. I want to say about globalization, because blockchain really bring this to us. As you can see from the panel today, it's quite international also. Yes. So also the audience asked question whether there will be any negative points about whether China have a lot of patents in this area or not. We should look at more on the technology and also the benefit side. It's part of the technology iteration, and also it may going to impact on the value chain for the insurance, maybe, okay, but it's a kind of collaborative effort. We can push this further to generate more social benefit, and maybe at the moment the main insurance company they haven't explored this now, because it's required different business model, pricing model, risk model to evaluate blockchain insurance. But I believe this will be something keep on going for discussion, and also in the implementations, and then maybe one day in UK we can also have more and more this kind of product come out. Yes, so in summary, I would say commercial value, ecosystem, and the globalization will be the key point I want to suggest today. Back to you.
No, thank you very much for that, and thought-provoking information. We do have about roughly just under 10 minutes for some questions, so who would like to have their hand straight up? Gentlemen, would like to stand?
Hi, my name is I'm representing the Government Blockchain Association London chapter today. Really insightful the ideas around how blockchain can revolutionize insurance. My question was from a slightly different angle. Lots of new blockchain ventures and entrepreneurs, they really find it difficult to get insurance coverage. For example, professional indemnity insurance is not easy to get because Lloyd's of London underwriters just don't get crypto companies. Is there not a surprise? Is there anything that our esteemed panel, any thoughts you could give on that, or how that could be made easier?
Yeah, I can give one, which is that the services, most of the services that are being provided by blockchains, there are some exceptions, are evolutions of existing business models and existing support. If you are doing cross-border payments, if you are doing insurance, if you are doing supply chain, okay, there are rating models for pricing that risk that still work. Like I said, there are exceptions, but engage with your insurance providers, your brokers, your carriers, with a business model they understand and say, the fact that we're using blockchain, that's just a technology choice. What we're doing is working in this industry to deliver this product or service. Don't be leading with this is a blockchain, because blockchain doesn't deliver a set of benefits. It's the business models that it enables that deliver the benefit. Keep the conversation at that level. You should find it much easier.
I'd just like to follow up on that point. That's absolutely key. Blockchain isn't the answer to what you should be focusing on. That's not the introduction to entities. It's like, what's your problem? Solve it. And by the way, blockchain happens to be a technology finance. Absolutely good point. People always go to come and say, we've got this blockchain solution. It's not the way to do it. Blockchain, one answer, clouds another answer. Classic mainframe. Don't think about blockchain. It's just a technology. Absolutely.
Thank you.
Happy New Year and congratulations to Matt with some fantastic speakers. I truly enjoyed. My question is for all of you. What can we do to support the British government to be the global leader post-Brexit in the correct implementation? Because crypto means cryptography. And today, one of the accelerating funds got 50 million a fine because there were no GDPR compliance. So I'm a big advocate of privacy. So what can we do to teach the government and understand what the lack of cryptography and zero knowledge proof can do to protect our data? Because everyone is talking about that data is the new oil. Well, we are not commodities, okay? So how would you like to explain, and what can we do to make the government to understand the importance of the correct use of cryptography in the blockchain space? Thank you very much.
Who wants to have a go at that?
I defer to that guy.
I'll step in because, so my name is Jack Gallagher, I'm part of the team behind Zcash, which we mentioned several times, which leverages zero knowledge proofs to provide strong privacy. To address the question, there is a tension between the need to prevent money laundering and terrorist financing on the one hand, and personal financial privacy on the other. So there are people like myself and my colleagues at the Zcash team who believe that personal financial privacy is very important. There are also people who work in law enforcement, who work in policy organizations and regulators, who believe that it is more important to ensure that law enforcement organizations are able to investigate and trace transactions through and so on. So there's a very strong tension between those 2 points of view. Obviously, there is some the right to privacy is enshrined at various levels. There are specific exceptions around national security and prevention of crime and so on. But I think what we need to have is a debate. We need to have a discussion about the extent to which we want to prohibit or hamper the development of privacy-preserving technologies in order to ensure ongoing access by regulators and law enforcement to be able to access whatever information they want.
And how they do so. I think that's a crucial point. Just to answer the question directly, what would I do if I found myself in the privileged position of being in government? I had a magic wand. I would look to see how can the entrepreneurial community of the United Kingdom start to solve some of the challenges it faces in the future. I'm a big fan of seed funding for competitions, public-private partnerships, and working with some of the larger organisations on this panel and elsewhere involved with the Big Innovation Centre. I like competitions because they bring visibility and they create natural PR. I also like small amounts of seed funding that allow people to get moving. And lastly, allowing wherever possible that sort of ability to coalesce an industry and to move it towards a set of standards all the way forward. I think an outward-looking UK finds itself in a position where it does still have arguably the sort of the number one legal system in the world, one of the number one financial systems in the world, one of the number one insurance systems in the world, a fantastic technology centre, and an ability to punch above its weight historically. How do we enact all of that and enable all of that? We have the academics at the table, we have the entrepreneurs at the table. I think it just means the table needs to be there more often, and I think it needs to be done with intent and purpose. We did it well with FinTech, and I think a lot of that was optics, but I think there's an opportunity to bang the drum as we come out of the next couple of weeks, next few months. Can we find those excuses to create those good PR moments and to create those, just shine a spotlight on what's already happening, but also set an agenda for what might be possible if this industry were able to coalesce and work around a set of standards and a North Star, which is actually, I think as Jack points out, we do believe in the value of preserving privacy. We have to find the right way of dealing with some of the rightful desires, in my opinion, to deal with preventing the financing of terrorism and preventing money laundering. But let's have that debate, let's create that table often, let's have some competitions, and let's see what else we can do on back that.
I want to a quick, first I support everything that Simon just said, but the way to educate them is to educate them. One of the things that surprised me, I've lived in the UK for 15 years now, is how incredibly accessible our law leaders are. Okay, I have my MP's mobile number on my phone. You know, I called him about an issue about 8 or 9 years ago, and he responded. And he said, yeah, I'm happy to talk to you about it. So just, educate them by educating. Say, I want to talk to you about this. You'd be very surprised, at how accessible. This APPG itself is another great example. If you want to educate them, do it. Don't ask anyone's permission.
Beginning first. She does have my mobile.
I did want to pick up at the point that we raised a couple of times on how we can make more awareness of all our blockchain capabilities in the UK. I want to bring back in July, we launched a major report on about 800 words, 800 pages on UK blockchain supply chain. The supply chain of blockchain technology, the supply chain of the investors in blockchain, the blockchain companies adopting blockchain, the supply chain of the academics focusing on blockchain. We looked at all these areas, and now since that we have been clearly continuing the analytics, and we are now created it interactive online, so we can actually see who are the investors, which companies, or who are the academics doing what technology, or who are the SMEs, or the big companies in the different technological areas of blockchain. And one of the things which I think we could really be very useful, and this is in this group here, we have also called for participation in this. And I just want to highlight that again, and maybe we should circulate the links to this, because we now create online. I'm actually going to Wales tomorrow to present this one, and we also did something on artificial intelligence. I've been to Scotland, I've been to internationally. I was told last week at a major event for the Department of International Trade that this is one of the things to take with them when they go and showcase the UK. And I think that to do this at a bigger level, that would create kind of crowding in on both participation and finance with the whole community. It's not a lot that's needed, but it takes something to do this, and we'll just circulate this call again, which we did in the autumn. We have been in the news on this in the mainstream media and the tech press probably more than 50 times since July when we launched it.
Lester and then Mark.
Okay. I want to add one more point related to your answer, how to educate the regulator. So from our experience, we work with the Japanese regulator and also the Gibraltar regulator. The fastest way for them to understand the industry and understand the rule, how to set the privacy and the money laundering detention, that is ask them to issue license or even temporary sandbox. Right? Before when they do a temporary sample or issue license, they will get at least 50 maybe application from the top company inside the industry. And then we personally being interviewed with the regulator for 6 rounds and spend 1 year and submit tons of material about how we deal with all this privacy, KYC, ML. And we see how fast the regulator in Jakarta spend 1 year to pick up from know nothing from blockchain, become know a lot actually the industry, actually the procedure or the working process inside the blockchain company. So I think this may be the most directed way and also systematic way. You talk to the top 15 exchange or the blockchain company and know how they actually execute on all different kind of stuff. So yeah, so I think I will advise and also encourage all different government, no matter the regulator, just think about maybe you just issue a temporary sandbox or temporary license. And then in exchange, you get a lot of opportunity to talk with the actual people who work in this blockchain industry. And they will submit tons of material for you to review. Maybe just form a group or license group inside the government. Maybe they work.
Thank you. Finally, just Mark.
I'd finally say that all that we're talking about here, I think it's important not to hit this in a rarefied strata above everything else, because all these points we're talking about, law enforcement, access to financial services, insurance, privacy, data, all of this stuff is going to profoundly transform and influence society going forward. I think in ways we might not yet be able to imagine. So I think it's important, whilst we talk about the pace of technology and cooperation and working with lawmakers and regulation on a global and local scale, we have one eye as to how this is going to affect people outside of this strata, this sphere of discussions and policy making. I think we need to be very careful to make sure that we balance the pros and the cons, but also have one eye on what sort of society do we want to become, to what will this technology help us achieve as a society, locally, but also as a global group of countries working with each other and competing. This could have a huge impact beyond potentially the Industrial Revolution, and I think we need to have these sorts of discussions and policy making with that in mind.
Thank you for that positive conclusion. I said we would potentially run over time. We've guaranteed that we've run over time, as always, because of the interest that we have around this. First of all, I would like everyone to just show their appreciation for Haoda tonight. And I would like to thank Big Innovation Centre for all they do in ensuring that we can facilitate these events, and to thank you and have a good evening. Thank you very much.
Thank you.